Hey everyone, Abdel Misa here. Listen, I got many requests about inflation. Okay, obviously we're seeing a lot of inflation and you see it everywhere in headlines. And so the question was like, Abdel, do I think that there is going to be inflation continuing in the future? What does it mean from an investment perspective? And so let's get to it. Look, first of all, there is no question that we're experiencing inflation this year, okay? So you see it in the numbers everywhere. The CPI is up like 5% year over year. And so the question is not that. The question is not about inflation this year. The question is about going forward. Are we going to see a continuous inflation like that's going to exceed the 2 to 3% Fed target, or is it going to be transient? And that's the argument of the Fed. And so let me cover this specifically. I'll explain the case for the inflation continuing, okay, and then surprising to the upside, and then I will then talk about the case of inflation being transient. Okay, so the case for high inflation continuing is like, look, the Fed is falling asleep, okay, because we haven't had inflation for a long time, but this is different, okay? So the Fed is not reacting. So you have the Fed is still printing 120 billion. You can argue that the Fed should actually like start tapering already versus waiting to taper in the future, okay? So that's one of the arguments. The second argument is like, look, like we're seeing like huge numbers, okay? Like you're not talking like a little bit of inflation, you're looking at 5% year over year plus, and so that's significant. And then obviously we got a lot of fiscal stimulus as well, so that there is a potential to overheat the economy due to that fiscal stimulus, which if you think about the financial crisis after 2008, we really, yes, the Fed was supportive of the economy, but Congress had not enacted fiscal stimulus. Here we're talking about 5 trillion plus of fiscal stimulus and potentially more to come with the infrastructure stimulus. And so that's a big deal as well. So you combine all of this and then obviously pent-up demand with the COVID reopening of the economy and all of that, and then guess what? Then inflation is here, and inflation is here to stay. Okay, the argument for a transient inflation, which that's the view of the Fed. Okay, so the Fed thinks that all the inflation that we're seeing here over the short term is just transient, and then it should like drop in the future. Okay, now obviously what I would like to note is that the recent inflation that we have has surprised the Fed themselves. I mean, many Fed officials have come and when they look at the CPI, I don't think they were forecasting such huge numbers. Okay, so that's something to note. But the Fed is making the case that, look, this is going to be transient, and there are many reasons to think about this. Okay, so with the reopening of the economy, we got kind of like a mismatch, and that's probably the best way to think about it. On one hand, you had high demand, okay, and then on the other hand, you had supply constraints. So let me give you a few examples. I think if you look at lumber prices, at one point they were above like 1600. They went now below 1800, okay, or I'm sorry, 800. So they were from 1600 and then they dropped by 50%. That's an argument that, look, this is probably transient. Another example is when you look at used car prices. Believe it or not, used car prices this year are up like over 10% year over year. Where is it that you recall that you see used car prices going up, let alone going up 10% year over year? And part of it is, as you know, there is the chip shortage for cars, so that has been a huge part of it. And so do you think next year and going forward that used car prices are going to keep going higher? No, in fact, you could argue that more likely like prices for used car prices are going to correct significantly next year, and that's going to actually put downward pressure on inflation. And then let's not forget that there are big macro pressure that are pressuring inflation to go down into the future. I will mention two of them. Number one is demographics. Okay, so as population ages, here in the US. Okay, so you will expect less demand, and then so that's a downward pressure on inflation. But probably, in my opinion, the biggest one is automation technology, right? Think about it this way. I'm going to give a simple example. Let's say in the car industry, okay, self-driving cars. Okay, we're not far from full self-driving cars. Okay, you already seen them. I was driving in San Francisco like a year ago, and then look, I checked like here on the left hand side, there's like there is a car without, like I was shocked. Okay, so think about this way, right? Okay, whether you think it's 5 years, it's 10 years, right? Once the technology is established, think about the impact of it for a sec, right? Think about car drivers, Uber and Lyft drivers, truck drivers, okay? As we get automation in self-driving, many of these people will be impacted, and so that's going to drive inflation down. So you can see automation in everywhere, supermarkets, you know, now there is a supermarket in California, you just go in and out, and you know, you don't even have automatically, you get charged to your account. So that, like this automation and technology can be a blessing in many cases, but it also can impact jobs, and so that's going to be put a downward pressure on inflation in the future, in my opinion. So here is my personal view, okay? I think this year there is no question that we're seeing inflation, okay? So that's a given. Longer term, I do not think we're going to have an inflation problem because of some of these trends that I mentioned, whether it's demographic, technology, and automation. In between, we're talking next year, for example, it's a fluid situation, right? Nobody knows, in my opinion. It's very difficult to predict because the Fed is still continuing with its quantitative easing program, and then look, they think it's going to be transient. On the other hand, this might get out of control. I do think that they will react then, and then they have tools that are necessary to bring down inflation. But then if that's the case, it might lead to a recession, so you don't want the Fed to be late. And so I don't have yet a clear answer, to be honest, on this next year or so. I do think over, as I said, the longer term, we shouldn't have inflation problems. But look, it all depends on what the Fed does and then how the economy performs. And so there are a lot of variables, but it's something definitely worth watching because, look, if we get inflation, then, for example, value and cyclical stocks will outperform. If we don't have inflation, okay, like you're back to like growth, and technology companies will do well potentially. And so, you know, obviously it has also an impact on bonds, and other asset classes. Look, it's very binary. You get inflation, the investment, the way you should invest is very different than when you don't have inflation. But look, as I said, the situation is fluid, and I'll definitely keep a watch on it because that's really critical. Anyway, thank you so much for watching. I hope you enjoyed today's session about inflation, and please stay in touch. Bye-bye.